Hello everyone. In the modern business dynamics, it is very important for all of us to have the entrepreneurial orientations. So rather than taking some job, we must try to involve into some sort of business, or if somebody is having the business already operating, they must try to diversify and expand it to the wider horizon. Now, the government is also facilitating a lot by encouraging and supporting all these businessmen through various schemes in the process. Okay, so what is the important point? What is a prerequisite in case you want to start your own venture? And to be more precise, if you want to start your own production unit or the manufacturing unit, what is one of the most sought after prerequisites? So to be particular, I have to say that before starting a production unit, first of all, you need to have a market survey, real-time market survey, to be very accurate, because you are going to produce an item which needs to be sold out in the market. So you must try to take up a survey as to what is the demand of your proposed product in the market, or how much of the quantity is being already supplied to existing producers, and what is the gap for you. So having done that market survey, which could be 100% in case you're having a innovative product for that matter. So having done this survey, what next important thing entrepreneur needs to do? And that is actually finding out the break-even point. So the question is, what is the break-even point? So break-even point is a point of no profit and no loss, meaning thereby break-even point is such a point in the process of your business operation wherein you have already recovered the whole cost that has been incurred by you till that point in time. So how do you find it out? And the answer is, you have to take up the break-even analysis. So today we are going to have a discussion on this break-even analysis, its significance and its methodology, how you can do it with all effectiveness at your own disposal. So hi, I'm Professor P.K. Pathak, and I'm happy to be talking to you again, like all these previous days. I have had sessions on various aspects relating to the management, be it entrepreneurship, be it motivational aspects, be it group dynamics, or be it the personality development, be it effective communications. So in case you have not watched them, you can go ahead with them. You can watch it. You can subscribe to my channel. You can like, share, and comment, and provide motivation for me to take up more discussions of this nature. Okay. So now we will go ahead with the discussion, and I'll share this slide so that if you want, you can make a note of the important points of the process. Okay. I hope all of you can see this slide. This is the topic of the day: break-even analysis, and the ultimate purpose is to find out the break-even point. And I'll tell you why the break-even point is important for that matter. Okay, so let us first know what is break-even analysis. It is basically an economic tool in the hands of management and intended to determine the cost structure of a company. So cost structure involves the cost incurred, the revenue, and the profit margin in the process, and also the volume of the production. So all these four elements constitute the cost structure. And the break-even analysis is also thus used to identify or examine the relationship between the fixed cost, variable cost, and the revenue. And as I told you, break-even point is a point of no profit and no loss. So we'll go ahead further, and we'll try to explore what exactly the fixed cost and variable cost are. So you can see the fixed cost include the items which are displayed on the slide, like land and building, machinery, office equipment. And why we call them the fixed cost? Because once incurred, you need not to do it again and again. So for example, if you want to have the production unit operational, you need to first acquire some piece of land and build some building, offices, etc. So once you have done it, you don't have to do it again. Okay, and also you need to acquire some machineries, because when you want to produce something, you'll be requiring some high-tech machineries in which the raw materials will be put and the processing will take place and the finished goods will be produced in the process. So these are all one-time expenses incurred, and even the taxes salaries which are not one-time, but definitely they are fixed, because irrespective of whether or not you produce even one item, if you have hired some people, you need to pay them salary. And depreciation cost is all about gradual reduction in the value of the fixed asset through wear and tear, or simply because of the lapse of time. Okay, because all the components, they have got some life expectancy, and if you have with the passage of time, that life expectancy reduces, definitely the value of the item also will reduce. So this is the fixed cost which you need to incur irrespective of the level of production being 0 or 100 or whatever. Next is a variable cost, which is definitely, as the name suggests, it is variable, and it varies with the level of production. So if you produce 1 unit, the raw material required will be less. If you produce 100 units, it will be 100 times of that particular raw material. And similarly, it goes with the packaging cost, it goes with the fuel, and many other materials that are related to the production. So now you know what is the fixed cost and what is the variable cost. So now it is important for us to explore the graphical representation. Let us go ahead with that. So if you want, you can just draw this simple diagram. There is a very simple and basic graph wherein the x-axis and y-axis, you can see x-axis is indicating the units that has been anticipated as being sold, and the y-axis represents the cost and revenues. So this deals the money aspect, and the x-axis deals with the unit aspect. Actually, so as I told you, the concept of the fixed cost and variable cost, and also I have told you that at 0 level of production, you can see here at the point O, which is indicating the 0 level of production, you already have incurred some cost in terms of the cost for land, for the building, for the office, for machinery, the equipments. So on all these points, you have incurred some cost, which let us assume that you have spent so much of money. So from point O, you have come to here in terms of the cost. Okay, but once these costs are incurred, they continue to be the same over the entire range of the production. Okay, so this fixed cost, this fixed cost will continue to be same. As you can see, the fixed cost line through the entire range of production is same. Okay, so this particular range is indicating the fixed cost. Okay, so now comes the variable cost. You have incurred the fixed cost, now you are starting your production. So with the first unit produced, you have incurred some cost in terms of the raw material and packaging cost, etc. So you have incurred certain cost, and the more you increase the level of production, the cost is going high and high because of the raw materials and other expenditures involved. So this is the cost line. Now this cost line is represented in what? This may represent two things. Okay, this is total cost line when the point of reference is, or the line of reference is, x-axis, because from x-axis, if you see this particular point, this includes the fixed cost and also the variable cost. But if you see the point of the line of reference as the fixed cost line, then this will represent the variable cost. Okay, so this line is representing, let us assume that this is representing the total cost, because beneath this lie the variable cost as well as the fixed cost. Okay, fine. Now when you have produced certain units of the item, proposed item, you need to sell them out in order to generate revenue. So when you sell the first item, you get the first revenue. So from 0 level, you start getting the revenue, and the more items you sell, you are generating more and more revenue. Okay, so in the process, there is a point where you have generated enough revenue, and this line is cutting across or intersecting the first line. So here is a point where revenue line is intersecting the cost line. So what does it mean? It simply means that whatever cost you incurred till this point in time, in producing these many units. Okay, if you draw this imaginary line, you will find out some units here. So when you have produced these many units, you have been able to recover all your cost incurred in the process. Okay, because this is the point where so much cost has been incurred, and this is also the point that so much of amount has been received. Okay, so this is a point of intersection, and this we call the break-even point. So here is a point of no profit and no loss. You have just incurred some cost and you have just recovered all those costs. Okay, so from here on, now the revenue line goes above the cost line, and so therefore, when the revenue is more than the cost, that will result into some profit. And the more item you sell out, the more profit you will be able to generate. So this whole area, we call it the profit area. Conversely, you can see here, this is a loss area because here the revenue is all along less than the cost. Okay, so this is loss area, this is the profit area. Once again, let me repeat, this is the fixed cost line. So this is indicating the total fixed cost, and this is a variable cost line indicating the variable cost, but the overall impact is that this line is also representing the total cost because it includes the fixed cost and variable cost. This line represents the revenue line. Okay, so let us assume that we have been able to produce this much of item. Okay, this much of item. So in producing this many units, or to be more precise, anticipatory, we have assumed that the units have been sold. We have generated this much of profit. Okay, so what do you get? You get in the process the break-even point. And why it is important for you to know the break-even point? Because then only you'll be able to know that even all the efforts put in the process of doing business, whether or not you'll be able to generate some profit, because which is what is the motive. No businessman is doing business just for the sake of charity. It is purely for the sake of benefit. So you must try to find out what is your break-even point at any given point in time. So that if there is a possibility in terms of your capacity of production or the market demand for that matter, if you can produce beyond your break-even point in terms of the units, definitely you'll go ahead with the business proposal. Or if you are not able to reach even up to your break-even point, you can outright reject the proposal. Okay, so I hope you have understood, and there is no doubt in that. Now let us see, in terms of the calculations, we can calculate the break-even point in two ways. One, in terms of the units that should be produced in order to reach up to the break-even point, and second, in terms of the revenue. So the amount of money that has to be generated to reach the break-even point. So these are all the simple formulas in the following slide. You can just make a note of it. In terms of the unit, this is the formula: break-even point is equal to fixed cost divided by contribution per unit, wherein the contribution per unit is equal to selling price per unit minus variable cost per unit. And the break-even point in sales values, the formula is break-even point is equal to fixed cost into sales divided by sales minus variable cost. Okay, so these are very simple formulas. You can just calculate and you can find out the break-even point, and accordingly you can decide to go ahead with your business or not to go ahead with your business. Now, why it is important to know what are the uses of the break-even analysis? Suppose you're going for a new business, you don't have the idea about the production cost and volumes involved with a given level of profit margin. So it will guide the management to involve a suitable pricing strategy, because you cannot keep too high a price, because it's a new product and people will not be taking all the that much of high price. And in case you are an established business but you are manufacturing new products through diversification, and why diversification is taking place, just to mitigate the risk of getting outdated. Suppose whatever item you are producing, and if suddenly the consumer are not demanding it, you should not have to close down the business, because you are already having diversifications in different ways. And in case you are changing the business model, you have been doing business but you were in the retail, but now you have decided to go into the wholesale business. So for the retail there will be a different break-even point, and for the wholesale it will be a different break-even point, because the price of acquiring, the cost of acquiring will differ in both the cases, and so will the price of selling in both the cases. So in all these three conditions, one needs to have a break-even analysis carried out in order to find out the break-even point, and to take strategic decisions there. Okay, so hope you have a lot of clarity now and as to what exactly the break-even analysis is. Okay, so that's all for the discussion today. I hope you have enjoyed knowing all these things about the break-even analysis. Thanks for watching the video, and once again, I urge you to like, comment, share, and subscribe to my YouTube channel to keep on receiving more interesting video. This is my email ID in case some of you need to connect with me and you take my expert advice on certain management aspects. So I'll be happy to share with you. Okay, so on that note, I conclude for the day and have a nice day. Thanks for watching the video.